Hello traders, this is Blake Morrow and you are listening to the week ahead video for January 28th, 2018, and I want to welcome you guys and gals to this week's installment. Before I get started, I just want to mention if you guys haven't tried Forex Analytics yet, make sure you do so. It's only $1, 10 days. You have complete access to our system, and you can also download the app and see what it's like to get our notifications and analysis while you're on the move, which we all are nowadays. So make sure you do that. All you have to do is click the button right here in the middle. It says sign up today, and then once you do that, you'll be able to log in and see our traffic light page, which is looks just like this. Okay, now let's talk about this week, and let's talk about the week that is coming up. Now, I'm going to start off with, let me just take you over to a live shot of the dollar. This is the dollar index. And as you can see, it has been destroyed this week. It's been nonstop bludgeoning of the dollar. And as I pointed out last week, I wasn't really interested in buying the dollar, even though I did a couple of times just scalping wise, because we'd get oversold intraday, and sometimes it was frustrating, sometimes I made money. But overall it was more of a frustrating event trying to pick up dollars as we were approaching some of this support. But the last couple of days of the week, we saw the dollar really respect some major fib levels. Now, you could see right here, we had a 261% extension of this little consolidation here, which it comes right in at the same price or at the same level, which is 88.40. We had 161% extension of the flag that we had established, and we hit some support and stopped there. And also, I guess I should note, it's also a big 618 retracement of this huge move. So you can understand why the dollar stopped where it stopped. And that's important, because if we break that support, there isn't anything really left to support the dollar for a couple of dollars. You would see some, maybe horizontal support here around 87. And then the next big fib level comes in around you got 84.50, and then you got maybe an 86 over here somewhere around there, or 85. So there's not a lot of support once we break, and I don't know if we're going to break it. To me, it seems like we're going into a period of consolidation if you take into account next week. Next week, we do have an FOMC meeting. It's actually Janet Yellen's last meeting. She's probably going to be, it's not going to be a lot of change. But if the Fed continues to stay upbeat about the U.S. economy, and maybe even more upbeat than we had previously seen, maybe they adjust some of the verbiage, maybe the dollar does get some sort of relief rally. But I'm gonna warn you at this point, if you look at, just look at the technicals here. We hit very oversold conditions on the daily chart. We started to diverge this last on Friday on the last stab lower, and the dollar could be due for a bounce. I don't know if I really want to buy the dollar. I think I'd be more interested in selling rallies. However, that doesn't mean opportunities won't arise. There are a couple of charts that I think that are interesting should the dollar actually start to show some signs of a bounce. All right, so I wanted to show you the dollar index myself, because I think it's important that I drew some of those levels for you. Keep in mind, we have a big bear flag pattern, and it goes a lot further. I mean, if you think about everything that we've got here and how far we could possibly go, and the dollar index longer term doesn't reach any support till we get to the 84 level, which I'm sure we're going to eventually make our way down there. I just don't think it's going to be a straight shot. So with that being said, let's take a look at a couple of these other pairs that I think, if the dollar does bounce, is important to watch. Now, let's start with the euro. So the euro looks like we're in a consolidation. If you go over to the daily chart and you just see what we're doing here. We're just consolidating. The 125 level has been a sticky, very sticky level for the market that was 161% extension intraday. It's not on this particular chart, but you could see the 161% extension over 124.26, but the one of this little triangle consolidation came up to about 125. We have also, if you go over to the weekly chart, the 126 level right here is actually, and it's not on this particular chart, but let me go show you here. There is a long-term multi-year trend line that comes in right around 126 as well. So, 126 is going to be a really big deal for the euro should we continue to break higher. But as far as I'm concerned, it seems like we're going to probably do some backfilling, maybe to 123, and then you're going to see some buyers come in. It's not going to be, I don't think anything that we see here is going to be anything more than a consolidation. It's not going to be a reversal. I think if you're looking at the euro from a, oh, it's going to reverse and we're heading back down to the teens or the 118, 120 level, I just don't see it right now. Now, perhaps something emerges in the future that, maybe sometime this week or next week that might change my thought. But based on the information that we have right now, and based on, equities where they're at, gold, what it's doing, it just, to me, it seems like the dollar might just consolidate, but any type of bounce is going to be very short-lived. But that's the euro. Let's take a look at the pound. The pound has made just an incredible rally. We hit a 78% retracement of the post-Brexit move. So you can see this, the high, that's the night of Brexit actually. Then the low following the Brexit move, we reached a 78% retracement. Obviously, everything is extremely overbought. Relative strength is very overbought. Again, any type of pullbacks here that you see in the pound probably are going to be limited to maybe 140, maybe 139. We're not going to see too big of a bounce in the dollar, especially against the cable, at least not right now, unless new developments appear following regarding Brexit and maybe some of the trade negotiations or that are going on there. Did I just say trade negotiations? Yeah, actually, I guess it is trade that's being negotiated right now. Just making sure. It is. Remember, it is the weekend for me, so you got to give me a little bit of a break. All right, here's the Aussie dollar. Now, the Aussie is interesting. The Aussie actually hit the recent high from the summer, and we closed just below that high. Now, we also, you can see this very, very strong channel that we've been moving up against. And the problem that I see here with the Aussie is the relative strength is diverging, and it has been diverging as we've been reaching in a new high. So you got to be really careful with the Aussie. I think actually Sunday night, Monday morning, if the Aussie pokes its head up again, back into new highs, that might actually be a place to trade counter trend. But I think while we're above 80, it's still very bullish. That's going to be the channel low. Okay, and you can actually see it here on the on Forex Analytics, the 4-hour chart. 80 is going to be the channel low, and as long as we're above 80, I don't see any reason for the channel the uptrend to stop. But we could play back towards 80. Let's take a look at the Kiwi. Kiwi is also now the Kiwi. Just I have to say the New Zealand data this week, horrible. The CPI data, there's two pieces of data last week, and I should go back and take a look for you. Out of New Zealand, we had the CPI, which was it was really good, or really bad, excuse me, and then some PMI data that came in. It was horrible, and so the Kiwi obviously was underperforming. You can see how the dollar was reaching higher, or excuse me, the dollar was reaching lower the last couple of days. The Kiwi was really underperforming against its other major counterparts, but we're still following this channel. And so as long as we're above 73 cents, The bulls still are in control. But if there's one that's going to, you know, maybe show reversal first, it might be the Kiwi dollar. Also, speaking of which, I'm going to take you over the Canadian. The Canadian, you know, we're attempting to break lower, and obviously these NAFTA negotiations are ongoing, and it's almost moving on headlines, but dollar weakness hasn't appeared in the Canadian, the US dollar Canadian, like you've seen it in the euro or the cable or the Aussie or the Kiwi. Really, the Canadian has stubbornly been going down just with overall dollar weakness. If there's any type of news that would be negative Canadian dollar regarding NAFTA and bullish for the dollar, maybe negotiations have hit a rough patch, that could really allow for the dollar Canadian to squeeze higher if we see a dollar bounce overall, or if there's some headlines. So just keep an eye on the dollar Canadian. One last dollar pair I want to pull up is the peso. Now the peso, or actually I'm going to pull up two. I'm going to talk about the yen, then I'm going to talk about the peso. If you look at the dollar peso, we hit the 200-day moving average, and we rallied back above the 200-day moving average, and that is a bit of a warning that we took out all the stops below the 200-day moving average. And if this currency pair can break back above 1870, it's going to start to squeeze. And but the same lines of that I'd give you about the Canadian, same would go for the peso regarding NAFTA. So these NAFTA headlines, they come fast and furious, and so you got to be a little bit on guard. But technically, we broke through some horizontal support there. We cleared the 200-day moving average. It really stopped everybody out, and now we're holding. So if we see any type of dollar bounce, it could come through the peso as well. Last but not least, I have to talk about the dollar yen. Obviously, the dollar yen has been beaten with the ugly stick. We've pretty much completed a flag pattern. We hit the 78% retracement. Some Kuroda comments on Friday while he was in Davos at the World Economic Forum, saying that they've pretty much hit their inflation target. That allowed for the yen to strengthen. And then the BOJ had to walk back those comments at like 4 o'clock in the morning in Japan's time. They're like, oh no, Kuroda didn't really mean that. But hey, look, the damage is done right now, and we are approaching some really key support. And this is let me see on the weekly chart here. You can see the big triangle formation. Massive support comes in around the 108 but 107.50 levels. In the event that the yen starts to strengthen further and we see the dollar yen break down, I don't know if it's going to be so much of a dollar story versus a yen story. And that's when you have to start paying attention to all the other yen pairs, like the euro yen, pound yen, Aussie yen, New Zealand yen, Canadian yen, peso yen, those types of pairs. But we're approaching a multi-year trend line and a big triangle support, which I think that from a risk reward perspective, hey, if you want to play counter trend, you could buy the dollar yen because you know where you're wrong. It breaks below 107.50 or so. It's probably wrong, but I don't know. To me, it's a little risky, because if equity markets, which I'll just one last chart I'll show you really quick. Here's the S&P, and the S&P has been following this really nice channel higher, just like a lot of these pairs. But if we stall and reverse and break back below this channel support, the yen might actually pick up some steam, and so the dollar yen might be in trouble, or the other yen pairs might come down, because the yen might get a little repatriation or a little buying if we see some sort of risk aversion. Anyway, something to pay attention to going into next week, especially with the yen pairs, the dollar pairs, and the S&P. All right, as far as next week goes, let's talk about it really quick. It is non-farm payroll week, but there's more happening. There's Janet Yellen's last FOMC meeting on Wednesday. On Tuesday, we have CPI out of Australia, which is going to be an important number considering New Zealand CPI missed last week. So, if Australian CPI misses, that's going to be a big negative for the Aussie dollar, in my opinion, because we've seen such a big rally as well. Now, remember, we do have non-farm payroll. So on Wednesday, we have ADP, non-farm, the private sector employment data. Canada's GDP numbers are also going to be released on Wednesday. We have employment cost index, which that's important here in the United States because we're looking for wage inflation. That's a big thing that a lot of traders and institutions are looking at right now. On Thursday, we have ISM manufacturing data out of the US. Actually, we have, even before that, we have UK manufacturing PMIs as well. That's early Thursday morning. Then Friday is going to be the jobs report here in the US. Canada does not release their jobs report this week. It's going to be next week. And then we also have construction PMI out of the UK. So guys and gals, hey, listen, if you really enjoyed this video, make sure that you click the thumbs up button, that you really enjoyed it. And then also one other thing that I wanted to mention, aside from making sure you oh, I already did this, dang it. I was gonna show you guys something, but I'll have to do it like this. Here, let me show you on Twitter. Hey, vote for us for the FX Street best new contributor. We're in that category. Make sure you vote for us if you get an opportunity. You have to do it when you're logged into Google, because they keep track of make sure that everybody only votes once. But we're nominated for the best new contributor category. So make sure you vote for us. If you like what we do here, and you're not a subscriber of Forex Analytics, at least go vote for us. It's free. But also, make sure you can, if you want, take a trial of Forex Analytics and be a subscriber there as well with us. And we'd love to have you. We'd love to see you in our chat rooms. Anyway, guys, gals, have a great rest of your weekend and have a great trading week next week. My name is Blake Morrow with Forex Analytics. Talk to you soon.